I'm here with Vineet Budki. He is the CEO and managing partner of Cypher Capital, a venture capital firm dedicated to the crypto and blockchain space. This is a very broad space. People think crypto, they think one or two coins. But we're going to be explaining exactly your multi-asset diversification strategy within crypto. Very interesting. Welcome to my show.
Thank you for speaking here, David. And as you said, multi-asset strategy fund, it's all about risk diversification. I hear a lot of people who say that we invest in tokens, that's what it's all about.
Yeah.
But what if you are wrong? Why shouldn't you spread across? And when you look at crypto, there is definitely things like investing in early stage tokens. There's definitely things like having a liquid asset strategy where you end up buying bitcoins and all the key tokens. Then there's also mining. Mining is something which gives you a good return over a period of time. This is basically running the network infrastructure. Mining can also mean having nodes for proof of stake things. So we devise our strategy so that we are across a lot of things.
Yes.
So that risk can be minimized. Maybe the returns might not be 100x's in case of single token entries, but at least the risk factor is very well.
A point you made offline to me earlier, that's very important. You don't invest in tokens, you invest in use cases.
Yes.
Let's talk about the applications of DeFi that you think are most important right now.
So interestingly, in 2017, everyone wanted to plant a tree in Africa and raise a
Sure.
crypto ICO round. So I thought 2017 was all about ICOs. 2020 was all about ICOs and use cases. You had Aves, which said that you can lend and borrow on chain. You had different KYC solutions. You had insurance that came up. You had launch pads that came up. So 2020 was all about use cases and ICOs. I think season 2024 is all about ICOs, use cases, and adoption. Where does this adoption come from is critical. When you look at Zimbabwe as a country where the currency has completely failed, and today US dollar is being used as a way to transact. Why doesn't someone from crypto who holds these USDTs who are building this USDTs land up over there and give a use case to people where they can actually use this as a currency? Why is it that people are taking banks hostage in Lebanon and not using an Aave or a compound with a debit card facility attached to actually make transactions? So,
to give context, the people in Lebanon can't withdraw their cash from their banks.
There's a limitation on the amount that you can withdraw. Even if you remember, I've been talking about the use case of Bitcoin as a store of value as well. When you talk about Argentinians losing 95% of their value in peso over the last 10 years, there's a basic use case even in Bitcoin that you can preserve capital. But then there are wider applications across KYC, digital identity. If you look at a product known as WorldCoin, which is banked by Sam Altman.
Right.
They're building the Aadhaar ID, which was basically an identity solution for the whole globe. So these use cases, I believe, will get the next set of users on board.
I want to talk about the Lebanon case, for example, because that is one prime example of something that could happen to any country, hypothetically, but we are not prepared for that. Suppose we live in a country, not just Lebanon, where I can't withdraw all my money and you saw people in Lebanon robbing banks to get their own money. How is DeFi going to help us? Because I still can't go. Let's say I have all my money in DeFi or on a DEX or in Bitcoin on a wallet. I can't go buy my everyday groceries in Lebanon with Bitcoin, can I?
So you can buy it with Bitcoin, but there are different solutions which are giving you a debit card option.
Very slow solutions, right?
Not really. People are using those debit cards across. In Dubai, you can use those cards as well. See, there's a regulatory hurdle for sure, for someone to launch up a debit card. Yes, you need approvals. Maybe similar things exist in this, but in Lebanon as well. But again, they're not so slow. It doesn't take hours to do a transaction. Bitcoin also runs fast, but again, coming back to what we had spoken long time back, I personally don't consider BTC as a way to buy groceries. I would consider USDT as a way to buy groceries because BTC is an asset and you normally do asset to asset transfers. Expensing is done from stable coins or currencies like a US dollar or USDC. And yes, there are solutions in the market which offer you a way to go off ramp and buy stuff.
I believe when we spoke a while ago in Paris, you told me that, I'm not going to misquote your number, but a large percentage of the world population will one day adopt, is it Bitcoin or cryptocurrencies?
That's crypto as general, I would say. So I think we spoke at the height of the bull run when everyone was saying that tomorrow morning we are going to go to $1 million Bitcoin. See, again, when we look at numbers, last year we were at 300 million wallets, and if I assume one wallet is 1%, that is less than 3%. Today it stands at 400 million, which is crypto.com report. So we are still too early, and out of this 4%, 90% are speculating. They have no clue what Bitcoin stands for, and you can pay through USDT, and USDT is a stable coin.
Not to beleaguer your point, but speculating is a case in itself, a use case in itself, is it not?
I don't believe so.
Okay.
Speculating, and personally I keep speculating and trading, not as a use case. This is more of an investment criteria where people are coming, but there is definite use case. Imagine you, rather than paying through your cash, using USDT and a card to buy your coffee in Dubai. This is a use case.
Yes.
For me, for example, I have bought a house on Bitcoin in Dubai. This is, for me, is a use case. Trading, speculating, personally, I don't still think it's a use case.
Loans, credit, using credit facilities, probably the most important product for a consumer. How can Bitcoin or any crypto be adopted in the credit markets?
So see, the easiest way to look at the credit market is, suppose you have a house. You have a house and you need a loan against it. Normally it takes 1 month to 3 months for a banker to decide whether to give a loan on it.
Yes.
Now imagine you have the same $1 million in Bitcoin. On an Aave compound, you can actually land up having a 60% LTV loan in less than 5 minutes. This is a very basic use case. Now imagine the further extension which will happen in the next 4 or 5 years. All the title deeds of these houses land up on chain, appraised by people, valued by people, and you can lend and borrow on those based on pools of real estate investors that are there. So this is a real use case which will get the masses on, because you don't need to end up at a bank to borrow against your house and take 3 months to get it.
Yeah, and you think that this is going to happen on stable coins, not necessarily BTC?
It can happen across different things, but I would say, because BTC is an asset, assets are normally meant to store, and they're a way to store value.
Right.
They're not a transacting event. So you wouldn't want, so for example, I have a Bored Ape. I would prefer to get a loan on it on a stable coin, because I just have to pay $5,000. Suppose I take 5 Ether against it and it goes to 5,000, I have to pay higher. So.
Okay, I want to talk briefly about stable coins. How stable are stable coins? First Luna, then last week Silvergate collapsed, brought depegged USDC. These things happen.
Again, it's a growing industry, it's an evolving industry. We're way too early on this. There are stable coins which are technically backed by assets like USDT. Again, there's this whole confusion happening whether this is audited or not. I think as more and more people get on board, and more regulation as well as audits come on board, people will start trusting it up. So as long as these stable coins are backed with some real value behind, should be okay. But yes, you will have cases where things will, like in Luna's case, which was not really an asset-backed security, but more on the token itself. We are evolving. It's early in the world, and even currencies like Zimbabwean currency and Lebanese currency and Turkish currency has collapsed. So it's not that this is specific to crypto.
Let me give you an opinion that I've heard and evaluate it, please. Stable coins will be bigger than Bitcoin. Precisely, well, not one particular stable coin, but the asset class of stable coins will be bigger than Bitcoin, because every single fiat currency in the world will one day, every major one will one day be on chain, and you have technically a stable coin.
I think that can be possible, because you're talking about money supply going on chain. It can definitely be possible. Gold has a 12 trillion market cap, and the money supply is much different number there. So it can happen. But in today's market, as I said, randomly said on the stage today that 4 TikToks is the whole crypto market and all. TikTok just raised $300 million valuation, the total $300 billion valuation. The whole crypto market is 1.2 trillion.
Yeah.
So and Bitcoin is just 2 TikToks. So
I want to talk about so let's talk about your thesis again. How many people do you think in the world will one day adopt cryptocurrencies?
So I would say, looking at numbers, I maintain my numbers 2030. I think 10% of the world, 10 to 15% of the world population will be on board.
800 million people.
It's around 1 billion people, I would say, that would be there on board. Something that I spoke on one other channel, this will not come only from the US. US is a great way to supply money to the system, but I would love if the adoption comes from Latin America, Africa and Asia, where the real use cases are there. Clarifying this specifically, a person who is getting 3% in a US on his bank account, getting 20% is a Ponzi scheme, but a person in Africa getting no value on his currency, which is depreciating and not even getting a stable economic return, getting the same 3% is value.
You look at talking about emerging markets. You look at look at adoption rates across the world. Southeast Asia ranks at the top, whereas the U.S. is somewhere in the middle. Why is that?
See,
what are they doing differently than the West?
So I think because the adoption rates are coming higher because the use cases are happening.
Yes.
Again, US per person account is different, and like a person coming in from the US has a much higher value in terms of an account, while a person coming from Philippines has a lesser amount. But
yes,
he's building up the use case. The people who were playing Axie Infinities were guys who were probably earning $100 a month.
Yeah.
And for them that is a lot of money. So I think these places are where adoption is coming from. But in today's day, money definitely comes from the US.
Well, let's talk about your home country, India. Soon to be one of the largest economies in the world in the future. In fact, Goldman Sachs has projected, I believe, India to be the #1 economy by 2070.
So
how are they going to use cryptos?
Okay, so these projections on the #1 economy have been happening for Japan in 70s, for China,
okay,
things like that. Again, you have to be in the top 10. That's what matters.
Right.
Then, now when it comes to crypto adoption, I've been talking to a lot of media outlets there. In fact, I just came back from a conference held 4 days back in Bangalore. I can see the energy. I can see builders are building. They're building products that can be utilized. Just that the mass still thinks, 100 million wallets, the biggest crypto adoption country as of now. But still, it's a speculative environment where government is trying to clamp down. They don't understand the use cases. They only see as the investment and the speculation cases. But because we are big in Web 2, Web3 is going to take over India.
Give us a hypothetical use case that would rival TikTok in adoption rate.
So there are, is it the same segment or different segment?
Within DeFi.
Okay, so I would say an Aave or a Compound, Aave or a MakerDAO would be a good use case. People lending.
What do they do exactly?
So Aave basically is a lending and borrowing platform. If you have $1 million worth of Ethereum, you can in 5 minutes deposit that, earn up to 1 to 3% interest rate on that, as well as borrow against it. So one, it gives you the option to earn interest on your deposits, and second, it gives you you believe in Ethereum and you believe it will go up. You don't want to sell it. You can borrow a stable coin against it and run your daily life on it. So assuming it lands up in Lebanon with a credit card where debit card where you can utilize it for spends, is a definite use case, and whole of Latin America and whole of African can use.
I'm going to give you a counter argument. I'm not saying use cases are not important. I'm just saying sometimes something doesn't have to have any use case to be adopted. I mean, what is the use case of a Bored Ape NFT?
Okay, so NFTs I would keep out. I'll explain the use case because I've learned it from the best. See,
yes. Okay,
if there are these high-end clubs in London which have a membership.
Yes.
Probably when they started it was £25,000 to get in, and today it is £1 million to get in. This club membership is your access to rub your shoulders with the best in London.
I understand.
Now, the whole thing is a membership club. NFTs is not just a funny picture of people. This is held by people who actually are members to a club where they have their get-togethers. You go there to hold business opportunities. In fact, there's a guy who holds 5 NFTs of the Bored Ape here right now. Landed up building his own NFT collection for a specific membership and raised $5 million odd. So again, you have to look at it from a membership perspective, and these club memberships in London as well are sold.
Well, that's a use case in itself.
In NFTs. Sometimes these NFTs are also landing up in the gaming story. You can use these NFTs to play a game and you can earn rewards to it. But there is use case as long as you understand what the team is trying to build around it. But then what you were talking about is meme coins, where meme coins got launched and no use case and suddenly built billions of dollars in market cap. So for that, I would say there are 2 things one has to understand.
I'll give you one example. Justin's son bought a picture of a rock for, I can't remember, but it was a lot of money, $1.something million.
As well as people got sold for $75 million. See, again, I don't justify those things.
Right.
People, when they make billions, do some funny stuff. But this is where a value investor comes on board. If you have watched the movie Gold, where without finding an ounce of gold, they ended up making a company into $1 billion company in Canada. This was in Canada. If you've seen the movie. Public euphoria takes over sometimes. That is where retail gets burnt out and non-value investors get burnt out. Meme coins have community behind. Yes, they pump up in price, but I personally will still invest in things that have value and have use case and will last for a longer period.
And two more topics. The first one, your speculative outlook on Bitcoin. You are not a speculator, but on Twitter, you've posted a number of tweets going back multiple months on your short to medium term speculations on the price. Being someone who is not professionally a speculator, you've been surprisingly very accurate every single time. Given your track record, and I want to show a few historical tweets, but given your track record, I'm curious to see what you think of the Bitcoin price going forward.
Okay, so those tweets are always when I have nothing else to do, and I always put it up as it's a
very humble man.
Yeah, but see again, what I tell people is that if you believe there's a use case of Bitcoin, then and you believe that those $200 million which Kathy Wood says are going to land up, and you really understand the use case, getting in at 25,000, 15,000, 50,000 doesn't matter, because there's still a potential of a 20 and a 40x over the next 10, 15 years. So I would always say that look long term on it, invest in something that is creating value and you understand that value. Not a short term trader. Short term is just to have fun,
I understand.
I need, just for fun, I need some gambling money, so come on, let's do it. But that gambling money has come because I have invested long term on projects which have given me crazy returns.
I understand, but can you talk about your short term prediction?
So my prediction, see again, if you take up the chart of Bitcoin over the last n number of years, you will see that 18 months post halving, Bitcoin always does an all-time high. Sure. If you remember, 20,000 was hit in December 2017. The 69,000 was hit in November. So this is exactly times with 18 months post halving. So we see a move on happening in the crypto markets during the halving time. There's a clear reason for this. Miners start becoming unprofitable and pull out liquidity from the exchanges. There's less supply, more demand because adoption is growing.
Right.
So I think we would see a market move on. Market move on means a $30,000 to $40,000 Bitcoin by end of year, and that crazy hockey stick after 2024, where retail comes in and starts buying things without any idea of what they're buying. And then we'll have the 2025 November. Okay. Best of luck with that.
Well, yeah, best of luck. We'll see how that happens. You've been surprisingly very accurate, despite your humbleness and on the fact that you don't do this professionally. Finally, I want to talk about Cypher Capital a little bit. You're an expert on venture capital and in venture capital investing. Just a little bit of background for the audience. How big is your fund? What are some of the sectors? Well, you already talked about that, but how did you come about being involved in the venture capital space?
So my first fund was a $10 million fund, single LP fund. The biggest miner in the world, the founder of that, Phoenix Technologies, Bijan and Munaf gave me that fund to manage. The fund that did well. At the top, it was a 50x on AUM. 10 million ended up being around $500 million. Then we opened up another fund, which is again a single LP fund, $100 million fund. Invested over $60 million last year, 30 million into mining and 30 million into projects. Overall, we have done close to 200 plus investments. We are the only investor in Sui blockchain in the whole Middle East region. I'm an investor to Web3 Auth. I've done investments in things like Casper Labs. So we have a lot of good projects that we invested in. And we've been investing. People said last year that the market's gonna crash and things are gonna get bad. But we found some amazing deals and we've been investing.
Give us some principles of investing in startups that you've stuck with that have given you success, or perhaps you've learned from mistakes.
So learn from mistakes. I was a startup founder, so I actually have learned from mistakes only. I think the best thing that one has to look as an investor is the team. Does the team have the capability to do something, and are they doing something which is logical? It has to be something that is their core competence. So team becomes very critical. We're not a lead investor, we are more of a co-investor. When someone, Sequoia is backing some project, if the project goes bad, market conditions go bad, these investors come and reinvest. So basically, investors also count. One of the things, again, a lot of people talk about tokenomics and those things. I think those are critical. The use case is critical. The need, why is this solution needed is important. One of the most important things that I look at now, because I'm a token investor, strongly a token investor, is the need and the want case of a token. So you need air to survive, you need food to survive, but you want a Ferrari. If the Ferrari doesn't come, you don't die. Now you need Ethereum to do every transaction because 70% of smart contracts are there. You need a BNB coin because BNB smart pad can make you a millionaire in a bull run. But someone's building an e-commerce platform where if you hold this token, you will get a 30% discount. This is a want case. I can go to Amazon and buy the same thing at a 30% discount. So you have to really understand that, is this a real need case, or is it just a random token, governance token, something token, which might not generate any value.
And I suppose understanding, you made it sound so simple, but most people don't understand what makes a good use case. That comes from experience, is it not? Or maybe you have a list of criteria you can share with us.
Yeah, so see, use case, so again, when I talk to a lot of founders and I ask that why...
Everybody pitching you a use case. No one's going to say to you, Vineet, my project has no use case. But how do you decide this guy is legitimate, this guy is not?
So, interestingly, when someone says my project has a use case, this is where the, the question comes, I meet a lot of founders and I ask them that why should someone hold your token?
Yeah.
Oh, because he can make 8% while staking it. So basically you are printing more money to give him money. This is not a use case. This is a Ponzi scheme. When someone comes and says, I have a game and people will play the game and make more tokens. Oh, again, let's print as much tokens as possible. My use case is that my product will have each one's identity as a transaction hash that can be used across the world to verify any transaction, and everyone who is using that transaction hash has to pay me $1 for that. This is a use case. If it gets adopted and everyone in the world uses a product like WorldCoin, which is backed by Sam Altman, then this is a use case. When someone starts lending and borrowing on Aave and the token really adds value. If I have 100,000 of your token and I get a 5% discount on my loan interest rate, use case comes because I get a better rate than the bank over there. So those are things which I look at it, and when you talk to founders, you really understand how clear they are, because when they come from the industry, they clearly know. Like you said about the NFTs now, some people really understand that NFTs are membership clubs, and they talk about it in such a way, and they clearly say that this is the value that I will add over a period of time to them. So that's where we evaluate them based on this.
You talked about planting trees and ICLs. We'll end it here. Someone, say, I'm gonna give you a hypothetical use case. All right, every time you plant a tree, I'll give you half of my token. I'll incentivize you to help the planet.
But okay, this is a good use case. Why do you need blockchain here?
That's a great question.
I'm nothing against planting trees.
Yeah.
Where does blockchain come? See, when there's a smart contract, you want to lend, I want to borrow. This is blockchain. Go plant trees, man, and take money directly from the bank account. Why do you need blockchain there? See, this is something that has to be on chain, right? You want to make tokenization of a house and make people buy it. Yes, this is a use case. Building a house doesn't need tokenization. Like building a house doesn't need. You can tokenize the asset.
Sure.
The point is planting the trees. Where is the use of blockchain?
Yeah. Good point.
You have to understand the use case critically.
Many people are making databases on blockchain where I've heard the counter argument, this is a very inefficient database system.
Yes.
Just use SQL.
Definitely there are such cases, and again, blockchain has been used as a way to raise capital. That's the basic problem.
Yes.
So that's where people have to, raising money on blockchain is not a use case.
Yes, okay.
So for me, again, infrastructure projects where layer ones are coming, suddenly, you have tons of hundreds of layer ones coming. But then there are some ones which actually want to build up a layer one for the gaming infrastructure, so that it's not that you just come to the layer one just to do a token sell. You actually play the game over there. So, you have to understand those use cases and invest wisely with it. Again, last bull run, I met people who took 100,000 USDT from me, and I'm not joking, this happened. And the guy, I asked him, how do you invest? He says, I saw a green candle and I invest. That's what retail is. They don't understand the use case and invest on hype, on green candles, and that's the time when I exited and sold everything at 60K.
Okay, well, yes, it's what separates most investors from $500 million funds. Well, thank you, Vineet, for coming on my show. I really appreciate your time.
And looking forward to talking next time as well.
Yes, next time, absolutely. And thank you for watching the David Lim Report. Don't forget to subscribe and follow Vineet's work. I'll put a link down in the description below for your website.
Thank you, David.
Yeah.